Welcome to the Hodlcast. Today is August 28th, and we're going to talk a little bit about the Celsius bankruptcy. So just to kick things off, people should know bankruptcies take a long time. Mt. Gox creditors are still waiting for their money back, and so are the Quadriga exchange creditors, and those happened in 2014 and 2019 respectively. So Celsius business model, they took deposits from retail investors and then they lent them to larger crypto companies and made very risky bets. It paid out exponentially high interest rates, and the company claimed it was low risk, but some insiders speak of a up to $2 billion hole on the balance sheet. So it was essentially a Ponzi scheme. In addition to the Ponzi allegation, Celsius users have also alleged the company was selling unregistered securities and violating state money transmitter statutes. So there's three regulatory challenges from a few different entities, but the SEC certainly would have a case against the earn tokens based on the precedents of the BlockFi $100 million charge that happened last year. Well, the earn program through Celsius was essentially the same. And then there's also state action that came from a number of states. And then if they weren't doing unregistered securities sales, then they were doing unregistered money license transmission. So, and then also a lot of the employees withdrew their own funds in advance of freezing the accounts, which created a lot of additional and perhaps unnecessary or unfair volatility. While the management was pulling their money out, they were announcing in public, ask me anything, that everything was fine, asking, suggesting users should continue putting their money in so that it could plug the hole of them, taking it out. So these allegations and the lack of transparency concerning the finances are the hallmark of what's called incompetence or gross management, and it's caused the bankruptcy trustee to request a independent examiner, and that examiner is from the Department of Justice. So it's usually the kickoff of criminal proceedings if the independent examiner does its exam and finds there was this fraud or gross mismanagement. So Celsius also had a native token. They created the Cell token out of, thin air. The co-founders and the management team are thought to have made over 50 million in profit selling their personal tokens back to the company or to the open market since mid-2020 until present. And the company made a lot of mistakes. The bankruptcy filings show there was a loan with Tether that resulted in a $97 million loss for Celsius. And there was also a really obvious mistake that happened with the Badger DAO. Celsius was hurt by Badger DAO's $130 million hack, and it received the corresponding restitution tokens, but then it sold those restitution tokens before they were available to be sold or before they were worth anything. And on the screen, whoever executed that sale would have had to click past several warnings. And so that caused another loss for the company. Their liquidity is expected to end in October. Basically, they had $66 million in August, 11 million expected in September, and they expect to be negative 33 million by October. 13 million in this 3-month period is going to payroll, and 57 million is going to this new mining venture that they've undertaken, which I'll talk more about later. I think it's I'm surprised the bankruptcy court allowed them to use the money to go into that, really, but it looks like a lack of understanding, or the judge got scammed too, thinking, oh, well, maybe they can just mine more Bitcoin, as if it's a really easy thing to just jump into the mining world, which is one of the most competitive industries out there. And then they also have 33 million allocated to restructuring activities, which is just basically the legal fees taking place. Their top 10 creditors showed 183 million is owed to just the top 10. So, as mentioned, we're running out of money, negative 33 million coming up in October, yet 183 million just to their top 10 creditors. And the top one is actually a company called Pharos, which is owed 81 million. And it's reported by Bloomberg that it's related to a company called Lantern Ventures, whose CEO is Tara McAuley, and she's a co-founder of SBF's Alameda Research. So it looks like, that there's a big SBF connection there. And then Alameda itself is the fourth largest creditor with 12.8 million being owed. So yeah, and then the mining business. So everyone involved here wants the money to stay in crypto. The creditors that are hoping for a payback, they want their payback to stay denominated in crypto, and Celsius itself is fighting to keep denominations in crypto. So then Celsius said, well, maybe we can start a mining operation and just mine a lot of Bitcoin. Hopefully over the next few years, Bitcoin, while this bankruptcy proceeding happens, Bitcoin's price will moon, and we can pay everyone back. I believe that's along the lines of what they told the judge. Judging from their own action, they'll pay themselves back huge salaries before anyone gets a cent of any Bitcoin. But also miners are nothing like as profitable as they often report to the markets that they are. It's a very tough industry. There's low margins. It depends so heavily on where you're located, what the energy is like, the energy cost. And Celsius energy cost is actually quite high at 0.06 to 0.08 kilowatt hour, where Riot blockchain, for example, is at 0.025 per kilowatt hour. So they're way out of the ballpark in terms of competitive price for energy. They were thrown out of Alabama, New Jersey, Texas, Kentucky, and just recently, actually on August 8th, received a cease and desist letter from California, asking them, to stop selling unregistered securities in California. As I mentioned at the beginning, the SEC took a pretty harsh stance against BlockFi earlier this year, so it'd be surprising if they didn't take some kind of action against the EARN program. But at the same time, a hefty fine assessed against this bankrupt entity, it doesn't really look like it's helping investors. The action, the SEC let this happen for a number of years and did not take any action. So now to assess a fine after it's all come out would be kind of the only people they'd be hurting would be the investors, and that's their main overarching mission, is to protect investors. So we'll see how they handle this. Nothing would surprise me out of that administration right now. So I was reading through the transcripts or looking at the various communications with Judge Glenn, who's the bankruptcy judge, and one of them, he asked for all the terms of service dating back to 2018. They're trying to figure out exactly what is the property in the bankruptcy estate. And he said, little do I know that there were going to be 1,100 pages of them. So that's, since 2018, Celsius has had 1,100 pages of terms of service. Now, I write terms of service for a lot of companies. I try and keep these short and concise so everyone knows what's involved here. So a company that, just my take on an 1,100 page terms of service means you're hiding stuff, or it's weird. Like that's not a normal terms of service. There's something strange going on to have 1,100 pages of them since 2018. The trustee and the judge were also both shocked from Celsius. They said they wanted to sell some de minimis assets, and they didn't want to seek prior approval from the bankruptcy estate to do this. Now, normally when you say de minimis, that means not much. It's not even enough to worry about. It's de minimis. Usually it's like office furniture. And the way that the judge explained, or the bankruptcy trustee explained the motion, it looked like they were talking about some office furniture, like something very negligible, but it turned out it was notes and bonds and equity that they had outstanding in other crypto companies that amounted to millions. The trustee's exact quote was, "Certainly, I had no inkling the debtor was promising to sell millions of dollars of equities or notes or investments in other crypto businesses. Those were not what I would normally consider to be de minimis assets. So I want some better definition." And it was short. It was right after that that the bankruptcy petition for the examiner happened. So I think that just shows, how it's like out to lunch to think that that's a de minimis sale. And then we have DIP. So since Celsius has publicly stated that they're running out of money by October, they're attempting to get a debtor-in-possession, which is DIP, financing, which allows a company in bankruptcy to raise additional capital to fund its operations as the bankruptcy case runs its course. And then DIP financiers, they actually step in front of other creditors. So we'll see how this plays out. This is strictly opinion speculation, but I suspect SBF comes in with a big DIP, loan, and then steps in front of everyone. And, only the DIP creditor will get maybe a tiny fraction of their money back. Who knows? But there's just not enough money in. Who in the right mind, other than someone that wants to move to the front of the creditors for, a last ditch hope, would want to lend this company more money to fund this, crazy mining expedition that they have no experience in and are not well positioned, that they just spent $57 million to set up. That's the money they owe, that's the money that each person deposited to them, and they go and buy miners. And so then we look into the examiner a little more. This case has a lot of moving parts, and an examiner's job is to explain what's going on with the finances in a report that's easily digestible and understood by Celsius's many creditors. So the statutory vehicle for examiner appointment is Section 1104C of the Bankruptcy Code, and it provides that a bankruptcy court has the authority to appoint an examiner on request of a party in interest. So in this case, the trustee has asked. So, the reason to do this is to look into any allegations of fraud, dishonesty, incompetence, misconduct, mismanagement, or irregularity in the management of the affairs of the debtor. Everything I described above, we have, a lot of those aspects. Just the regulatory action alone, and the fact they didn't acknowledge that, or really they had to get cease and desist letters from a lot of the states. That's not normal. That's mismanagement, I think, right there. Celsius has also not been clear at all about how much money they owe to various creditors, and the independent examiner's job is just going to be to look under the hood and find out how much creditors can expect to receive at the conclusion. And like I said, this examiner is paid for by the taxpayers. So a lot of people were saying that this will add to that $33 million allocation to restructuring expenses or costs, because the cost of the trustee does come out of that category. But this independent examiner is from the Department of Justice. And then there's the Prime Trust lawsuit. So just on August 23rd, Celsius sued Prime Trust, stating that Prime Trust has 17 million of Celsius's assets. Prime Trust was Celsius's crypto custodian until all the state regulators started issuing these cease and desist letters, and then Prime Trust just ended the relationship, said there were too many red flags. But they requested, before giving the money back to Celsius, that each of the users would sign, like physically click a new terms before they'd send the money back, for at least the New York and Washington customers. But certain customers didn't sign. So Prime Trust returned 119 million and is still waiting for those remaining customers 17 million worth, I believe, to take that act of signing the terms of service. So Celsius decided to sue over that. Another great use of its money right now. I mean, maybe it is to get 17 million back, but that 17 million would have been just part of the bankruptcy estate. I don't think they needed to sue for it. All they would have needed to do was write it in their, tell the trustee about it, and the trustee can handle reaching out to Prime Trust and working with their legal team to get it back. This was just like a kind of, anytime you get into litigation, the legal costs of the lawyers, go up exponentially. So I was surprised to see, again, it looks to me like a mismanagement of funds by suing over this, when Prime Trust is a reasonable company. I'm sure they're not going to hold $17 million of their former customers money for their own private gain. There's a reason they haven't sent that 17 million, and that's because they don't feel like they can on good regulatory grounds, but they could send it to the bankruptcy estate now that the company's in bankruptcy. So that's just like another funny thing going on here. So the conclusion, like, I really don't know how long this restructuring is going to go until it turns into just a straight liquidation and the Celsius management gets taken out of there. And unfortunately, I don't think it's going to happen soon enough. I think it's too late. Celsius, it's 2 more months and they're going to be out of money. By the end of September, they're only expecting to have 11 million. And like we said, the top 10 creditors are 183 million. So the numbers just don't look good for people getting their money back here. And the next hearing is going to be on September 1st. So sorry to be the bearer of bad news to anyone invested in Celsius. Certainly they fooled a lot of people, including some major pension funds in Canada. It all comes back to, in crypto, if it's not your keys, it's really not your coins. Thank you, everyone. Have a great day.